What if I told you that while everyone's debating whether to buy Bitcoin or Tesla stock, artificial intelligence is quietly rewriting the rules of both games? And the winner might surprise you. Stay with me, because by the end of this, you'll understand something most investors are completely missing. Picture this. It's 2021, and you have $10,000 burning a hole in your pocket. Your buddy tells you to throw it all into Dogecoin because Elon tweeted about it. Your financial advisor says stick with good old-fashioned tech stocks. Fast forward to today, and the landscape has completely transformed. Artificial intelligence isn't just changing how we invest. It's fundamentally altering which investments actually work. And the data tells a story that's going to blow your mind. Let's start with something most people don't realize. When we talk about AI's impact on investments, we're not just talking about using ChatGPT to pick stocks or some trading bot that promises to make you rich overnight. We're talking about something far more profound. AI is changing the underlying value proposition of both cryptocurrencies and traditional stocks in ways that are creating massive opportunities and equally massive traps. Think about stocks first. For decades, the stock market operated on a relatively simple principle. Companies that make good products manage costs well and grow their customer base, see their stock prices rise. Analysts would pore over financial statements, attend earnings calls, and make predictions based on fundamentals. Then AI entered the picture, and everything accelerated. But here's where it gets interesting. AI isn't just a tool for analyzing stocks anymore. It's becoming the core business model for the companies we invest in. Consider NVIDIA. 5 years ago, it was a graphics card company for gamers. Today, it's the backbone of the entire AI revolution. In 2023 alone, NVIDIA stock surged over 230%. It's not because gamers suddenly bought 3 times more graphics cards, but because every single company building AI needed their chips. Microsoft, Google, Amazon, Meta, startups you've never heard of. They're all buying NVIDIA's hardware by the billions. This isn't speculation. This is fundamental transformation of what the company actually does and who its customers are. But here's what's fascinating. This AI boom in stocks isn't just about the obvious winners like NVIDIA or Microsoft. It's creating a ripple effect across industries most people wouldn't even associate with artificial intelligence. Healthcare companies using AI for drug discovery. Logistics companies optimizing delivery routes. Even agricultural businesses using AI for crop prediction. The S&P 500, which represents the broad stock market, has seen consistent gains driven largely by this AI transformation. With the index up significantly since the AI boom began in earnest. Now AI's impact on stocks comes with something traditional investors love. Fundamentals you can actually measure. When Microsoft announces a new AI product, you can track its revenue. When a pharmaceutical company uses AI to accelerate drug development, you can see the FDA approvals and patent filings. There's a paper trail. Quarterly earnings, real cash flow. This gives investors something concrete to analyze, something tangible to value. But let's flip the coin and talk about crypto, because this is where things get really interesting. Cryptocurrency was supposed to be the future of money, right? Decentralized, free from government control, the people's currency. Then AI entered the picture. And crypto found a new purpose that nobody saw coming. Suddenly, blockchain technology wasn't just about replacing banks. It became a potential solution for some of AI's biggest problems. Here's the thing about AI that keeps tech executives up at night. It requires massive amounts of computing power. And that power is concentrated in the hands of a few giant companies. Amazon Web Services, Google Cloud, Microsoft Azure, they basically control the infrastructure that AI runs on. This creates a centralization problem that goes against everything the tech world says it believes in. Enter crypto. Projects like Render Network, Akash Network, and others are building decentralized AI infrastructure using blockchain technology. The idea is simple but powerful. Instead of relying on massive data centers owned by tech giants, you could rent computing power from thousands of individual providers around the world, all coordinated through cryptocurrency and blockchain. It's like Airbnb, but for the processing power needed to train AI models. And the market has noticed. AI-related crypto tokens have seen explosive growth. Render Network's tokens surged over 600% in 2023. The Fetch AI token, which focuses on autonomous AI agents that can interact and transact using cryptocurrency, has seen similar massive gains. These aren't just speculative bubbles, though plenty of speculation is definitely involved. These projects are attempting to solve real problems in the AI ecosystem. But here's where crypto gets complicated, and this is crucial to understand. While AI-focused stocks are largely driven by companies generating real revenue from real products, AI-focused crypto is often driven by potential future utility. When you buy NVIDIA stock, you're buying a piece of a company that sold $26 billion worth of products last year. When you buy an AI crypto token, you're often betting that the underlying technology will eventually be widely adopted. Sometimes that bet pays off spectacularly. Often, it doesn't. Let me give you a concrete example that illustrates this difference perfectly. In early 2023, both Microsoft and a crypto project called SingularityNet announced major AI initiatives. Microsoft integrated ChatGPT into its products, immediately adding it to Bing, Office, and other services used by hundreds of millions of people. Revenue flowed almost immediately. Singularity announced plans for a decentralized AI marketplace. The vision was compelling. Imagine a place where AI services could buy and sell from each other autonomously, all coordinated through blockchain and cryptocurrency. Microsoft's stock rose steadily as AI revenue showed up in earnings reports. SingularityNet's token price went on a wild ride, surging on hype and announcements, then crashing when the technology proved slower to develop than expected, then surging again on new partnerships. Both were AI plays, but one was grounded in immediate, measurable business results. The other was betting on a future that may or may not materialize. Now, let us talk about something that doesn't get enough attention: how AI itself is changing the behavior of both markets. This is meta, but stick with me because it's important. AI-powered trading algorithms now account for a massive portion of daily trading volume in both stocks and crypto. These aren't your grandfather's trading bots. These are sophisticated systems using machine learning to identify patterns, predict movements, and execute trades in microseconds. In the stock market, this has led to increased efficiency in some ways, but also flash crashes and unusual volatility. Remember when the entire market seemed to move in lockstep? AI trading algorithms, all trained on similar data and using similar strategies, can create feedback loops that amplify market movements. A small dip triggers selling by algorithm A, which triggers algorithm B, and suddenly you've got a 500-point drop in the Dow in minutes. Crypto markets are even more susceptible to this because they trade 24/7 and have less regulatory oversight. An AI bot can detect a large sell order starting to execute on one exchange and immediately place trades on 5. other exchanges to profit from the price discrepancy before human traders even know what's happening. This creates opportunities. But it also creates a market where the average investor is competing against machines that can process information and execute trades thousands of times faster than any human. Here's something that might surprise you. Despite all the hype around AI crypto projects, traditional tech stocks in the AI space have actually outperformed AI-focused cryptocurrencies when you look at risk-adjusted returns over the past few years. NVIDIA, Microsoft, and Alphabet have all delivered substantial returns with less volatility than most crypto assets. But, and this is a big but, the highest individual gains have come from specific crypto projects that caught lightning in a bottle. It's the difference between hitting singles and doubles consistently versus swinging for home runs. Stocks give you the steady path, potentially doubling or tripling your money over a few years if you pick the right AI companies. Crypto gives you the chance to 10x or even 100x your investment, but with a much higher probability of losing everything. The question isn't which is better in absolute terms. The question is which matches your risk tolerance, investment timeline, and financial situation. Let me break down some specific numbers to make this concrete. If you had invested $10,000 in NVIDIA stock at the beginning of 2023, the volatility difference is stark. NVIDIA's biggest single-day drop in 2023 was around 6%. Render's token has seen single-day drops of 20% or more. Your grandmother would have been fine holding NVIDIA through the volatility. She'd have had a heart attack watching crypto. But here's what's really interesting about the AI angle specifically. Artificial intelligence is creating new categories of value that blur the line between tech stocks and crypto. Take data, for example. AI models are only as good as the data they're trained on. Companies that control valuable datasets are becoming incredibly valuable, whether they're traditional corporations or decentralized networks. Palantir, a publicly traded company, has seen its stock surge, partly because its massive government and corporate datasets make its AI tools more powerful. Meanwhile, crypto projects like Ocean Protocol are building decentralized data marketplaces where anyone can buy and sell data, with transactions happening through cryptocurrency. Both are essentially data plays powered by AI demand, but one fits neatly into your brokerage account, and the other requires a crypto wallet and a much higher tolerance for regulatory uncertainty. Speaking of regulation, this is where stocks have a massive advantage that crypto enthusiasts often underestimate. The SEC might be slow, it might be frustrating, but stock market regulation provides a level of investor protection that simply doesn't exist in crypto. When a publicly traded company commits fraud, executives go to jail, investors can sue. There are mechanisms for recovery. When a crypto project turns out to be a scam, good luck getting your money back. The AI boom has attracted bad actors to both spaces, but the consequences are very different. Elizabeth Holmes and Theranos show that even in the regulated stock market, fraud can flourish. But she's in prison now, and investors had legal recourse. Meanwhile, crypto has seen countless AI-themed projects that were nothing but vaporware. Founders who disappeared with investor money. And exit scams where tokens were pumped up with AI hype and then dumped. The victims rarely see justice or restitution. Now, let us talk about something most analyses miss. The philosophical difference in what you actually investing in when you choose stocks versus crypto in the AI space. When you buy stock in an AI company, you're betting that capitalism as we know it will continue. That corporate profits matter. That companies that generate revenue and earnings will be valued accordingly. You're working within the existing system. When you invest in AI-focused crypto projects, you're often betting on something more radical. That decentralization matters, that we need alternatives to big tech control of AI. That the future of artificial intelligence should be more democratized and distributed. You're not just making a financial bet, you're making a bet on a different vision of how technology should be organized. This matters because it affects how you should think about these investments. If you believe AI will continue to be dominated by large corporations, if you think the Microsoft, Google, and Amazon model will prevail, then AI stocks are the obvious choice. They give you direct exposure to the companies that are winning right now and seem positioned to keep winning. But if you believe there's a legitimate chance that decentralized AI becomes significant, that people will demand alternatives to concentrated AI power, that blockchain-based coordination of AI resources solves real problems, then some allocation to AI crypto projects makes sense despite the risks. You're not just gambling, you're positioning for a different possible future. Here's a practical consideration that often gets overlooked: liquidity. You can buy and sell NVIDIA stock any weekday from 9:30 a.m. to 4 p.m. Eastern Time. You can trade most major cryptocurrencies 24/7, 365 days a year. That sounds like an advantage for crypto, and sometimes it is. But it's also a psychological trap. The ability to check prices and trade at 3 a.m. can lead to emotional decision-making and overtrading. Studies show that investors who check their portfolios less frequently actually tend to have better returns, because they're not making reactive decisions based on short-term volatility. The stock market's limited hours force a certain discipline. Crypto's constant availability can encourage destructive behavior, especially when AI hype and FOMO are in the mix. Let's talk about diversification, because this is where a lot of investors get it wrong. The question shouldn't be crypto versus stocks. For most people, it should be how much of each, if any, crypto at all. Financial advisors typically suggest that speculative investments like crypto should represent no more than 5 to 10% of your portfolio, if you're including them at all. The bulk should be in stocks, bonds, real estate, traditional assets. But here's the nuance. Within your stock allocation, you can get substantial AI exposure through established companies with proven business models. Microsoft isn't going to zero. It might not 10x in a year, but it's not going to zero. Within a small speculative allocation, you might include some AI-focused crypto, understanding that it could go to zero, but that's why it's a small allocation. The mistake I see people making constantly is treating crypto like it's a different asset class that deserves equal weight to stocks. It's not. It's a highly speculative bet within a broader portfolio. The AI angle doesn't change that fundamental reality, even if it provides a more compelling use case than cryptocurrency as digital gold or whatever narrative was popular before. One thing that is undeniable: AI is creating wealth at a pace we have unseen since the dot-com boom, and possibly faster. The question is, who captures that wealth? In the stock market, it's flowing primarily to shareholders of large tech companies and the AI infrastructure providers. In crypto, it's more distributed, but also more chaotic, with huge gains going to early adopters of successful projects and devastating losses for those who bet on the wrong tokens. There's also a generational divide worth noting. Older investors who lived through the dot-com crash tend to favor stocks, even AI stocks, because they've seen what happens when speculation overwhelms fundamentals. Younger investors who've grown up with cryptocurrency and blockchain technology are often more willing to bet on decentralized AI solutions. partly because they have less faith in traditional institutions and more time to recover from potential losses. Neither approach is wrong, but they're suited to different situations. If you're 25 with a stable job and minimal responsibilities, taking a bigger bet on AI crypto might make sense. You have decades to recover if it goes wrong, and the upside could be life-changing. If you're 55 and approaching retirement, putting significant money into volatile crypto tokens, AI-focused or not, is probably not wise regardless of the potential returns. Here's something that keeps me up at night though. What happens when AI gets good enough to make these investment decisions better than humans? We're not there yet, but we're getting close. AI systems can already analyze financial statements faster than human analysts, identify patterns in market data that humans would miss, and execute complex trading strategies autonomously. When that happens, does it matter whether you invest in AI stocks or AI crypto? Or does it just matter that you're positioned in assets that AI systems will value? This is a genuinely hard question, and I don't think anyone has a good answer yet. It's possible that advanced AI will recognize value in both traditional corporate structures and decentralized networks. It's also possible AI will optimize for one approach and largely ignore the other. Let us bring this back to practical action, because theory is useless if it doesn't help you make better decisions. If you're trying to decide how to invest in the AI boom, here's a framework that actually works. First, ask yourself what you're trying to achieve. Are you building long-term wealth for retirement? Are you trying to generate life-changing returns in a short time frame? Are you just trying not to miss out on the AI revolution? For long-term wealth building, the answer is clear. AI-focused stocks within a diversified portfolio. Buy indexes that include the major AI companies, or, if you're comfortable picking individual stocks, focus on companies with real revenue from AI products. Microsoft, Google, NVIDIA. These are companies that will likely still exist and be profitable in 20 years, though their stock prices will fluctuate. For potentially life-changing returns, you need to include some higher-risk plays. And that's where carefully selected AI crypto projects might fit into a small portion of your portfolio. But be honest with yourself. You need to be willing to lose that entire allocation. If losing that money would significantly harm your financial security, you shouldn't be investing it in speculative crypto. For those who just don't want to miss the AI revolution, here's the truth. You're not going to miss it by staying in broad market index funds. The S&P 500 is heavily weighted toward tech companies that are all in on AI. You're already exposed. You don't need to make dramatic moves to participate in this trend. One more consideration that's increasingly important: the environmental and ethical implications of AI investments. Training large AI models requires enormous amounts of electricity. The environmental cost is substantial. Some crypto projects are addressing this by using more energy-efficient blockchain protocols. Some AI companies are investing heavily in renewable energy. If you care about these issues, they should factor into your investment decisions. Similarly, there are legitimate concerns about AI safety, bias, privacy, and the concentration of AI power. Some investors are specifically choosing decentralized AI crypto projects because they philosophically oppose to a few companies controlling such transformative technology. Others think that big companies are more likely to develop AI responsibly precisely because they have reputations and regulations to worry about. Your values matter here, not just potential returns. The bottom line, after all this analysis, is nuanced but clear. For most investors, AI-focused stocks should form the core of any AI investment strategy. They offer exposure to real, growing businesses with measurable results and proven models. The returns might not be as explosive as the best crypto plays, but they're far more likely to actually materialize. Crypto has a role, but it's as a small, speculative allocation for those who can afford to lose it and believe in the potential of decentralized AI infrastructure. The technology is promising. The potential disruption is real. But the risks are substantial and the outcomes highly uncertain. The AI revolution is real. It's creating enormous wealth, but getting rich from it isn't about making a single brilliant bet on the right token or stock. It's about understanding the different roles these investments play, matching them to your situation, and having the discipline to stick with the strategy even when FOMO is screaming at you to do something dramatic. Whether you choose stocks, crypto, or a combination, the key is being honest about what you're doing and why. Are you investing based on research and strategy, or are you gambling based on hype? Are you position sizing appropriately for your risk tolerance, or are you letting fear of missing out drive your decisions? Can you hold through volatility, or will you panic sell at the worst possible time? These questions matter more than which specific assets you choose. The AI boom will create winners in both stocks and crypto. It will also create plenty of losers who chased returns without understanding what they were buying. The difference between ending up in one group or the other isn't luck. It's discipline, strategy, and honest self-assessment. So here's my challenge to you. Before you buy your next AI stock or crypto token, write down exactly why you're buying it, how much you're willing to lose, and what would make you sell. If you can't answer those questions clearly, you're not ready to make the investment. The AI revolution will still be here when you've done the work to invest intelligently rather than emotionally. The future of AI and its impact on investment markets is being written right now. You can be part of that story. Just make sure you're writing it thoughtfully rather than letting hype and fear hold the pen.